Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? Thanks, Lucky. How we doing in YouTube? Hey, Stephen. Okay, thanks, Stephen. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Streaming live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis to overlay structured trades that are available to everyone in the Bookmap Discord Trader Lab community. This stream is really based on developing an understanding of how this business works, why the market might do what it does, and how at times you might get in alignment with it. And like everything in trading, the environment is always changing. It is unique, and potentially the best way to navigate this environment, if you accept that it's a random environment, is to only interact with the other participants when you have an statistical edge. It's very much gaming theory in the sense of we can't predict anything, though human nature wants certainty and to avoid risk. So most of us in retail side of this business go on a quest to find the certainty, and that is really to address the psychological or emotional needs, not to run after and grab the saber-toothed tiger by the tail. However, in this business, we are actually working in an environment of uncertainty, and because of that, we potentially should be changing our approach to it to be aligned with the business versus trying to get the business to align with our psychological needs. This is something most traders don't spend any time on because they're too distracted by indicators, time frames, and the rest of it, trying to get certainty and predictability. Imagine if you might be in an environment where that doesn't exist. Then where might that take you? And what might your outcome be if that is your belief? Now, I'm not suggesting you accept my beliefs. I am suggesting that you look at your results. And if you're waking up with what I call trader groundhog day, that is going back, looking, see what works, having random inputs, adjusting them. So next time, whatever that is that happens, that phenomena, that you'll be able to get that big swing or whatever it is you want to get, which we all have done, by the way. The thing about trading is that every moment is unique, and what happened yesterday does not reflect so much on how the market reacts today or where it does it. And that's the fallacy of predictability. So what traders tend to do is take a process that has random outcomes. And remember, in the casino, the gamblers walk out with dollars too. But the casinos only play games that are structured and have a vetted edge. They don't change the games. They don't tune or tweak. If somebody walks out with a suitcase of cash, they're not going to change the game. Yet that's what we do. Something for you to ponder. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades, and you can all take advantage of that, download the 60 PDFs, and take a tour in the Bookmap Discord Trader Lab, and there's a library of webinars to help you see kind of what this is all about. And of course, you have to vet this for yourself. The thing about trading is that there's not one way to trade. There might be processes that you might be able to relate to, and then this becomes somewhat of a adjustment to your psychology and the time frame or fractal you want to operate in. So it isn't do what somebody else does, whether it's me or somebody else. It's finding your groove and also the tools that will allow you to create alignment, but not randomness. If the environment is random, then what you need, in my opinion, is to be consistent. That means consistent processes so you can see if it actually has an edge. The thing that gets up many of us as retail traders is that everything works. That's the problem. It works. The thing about it is, if it's not consistent, you can't measure it. And even though it works sometimes, it has no edge, which means even though you have intermittent winners with the process, over time you're losing. And I'm sure if you actually understood uh, theory of gaming or probabilities or what's called an edge, and you've probably heard about that, then you would know you wouldn't continue doing that. But most of us are too hung up on fixing it, so it works better. That's logical, but not in alignment with the business, at least in my opinion. And of course, past performance is never indicative of future results. Your mileage may vary, and your results may be quite different than others in this business. But if you keep waking up with Trader Groundhog Day, it's something you might want to think about. So yesterday, we know we did the Acapulco cliff dive. And if you're in Trader Lab, you had a really nice day, assuming you have a vetted edge and followed your plan. And none of these things are easy. Getting the edge takes work. Recognizing where it is, you got to kind of find that. My structured trades that I share will give you kind of a blueprint or template of market mechanics. Then you can find or define the fractal. And what is a fractal? The rotation size that you operate in. Obviously, or maybe not obviously, what I do and what I tend to share here in the stream is fractal trading. Fractals are basically what you think of as time frames. All a fractal is an interaction of participants, and it is not time-based, it is behaviorally based. So that behavior gives us insight to what might be happening. And the word might is very much part of this, right? So I'm going to show you structured trades. Now, I obviously do other things, but that's not the key to this stream. I'm going to try to keep it high level and broad strokes, but I will get down into microstructure so you can kind of see it. I wonder if this is correct here. Hold on. I'm not sure what's going on with this. No clue. This might be incorrect. So this is the RTH open right here. Open overnight mid. Naked volume point of control. This is the highest retail price from yesterday. Think high volume. It is very much a shopping experience. Overnight volume point of control. This is where the highest volume was in the ETH. We have yesterday's low over here. This was a level which I had no idea we would ever get to. I mean, truly, I think the last level I talked about in the stream was 24 or 25, So, here we are. This was the next level below, and it was 70.25. Yesterday's low of the day. Pretty amazing. And then the other part of it was, and I narrated this was a long for me yesterday. Who knew? That's not easy, by the way. Now, the ETH low is here, and we have another target, and this is not a recommendation, here, 53.50, and it's on the price map. Now, it doesn't mean anything other than it's an area of behavior. Let me see if there's anything else down here. Well, not necessarily. Right now, I want to focus on the open, and I took a long. I will talk to you about the long. I will talk to you about a short. I will talk to you about a bunch of shorts and a long, and then I'm going to talk to you about the last shorts. And then I had to stop trading because of the stream, which kind of does bother me a little bit. I guess I just have to get his. Funny thing, my wife says to me, if I go, some of them, she says, yeah, get used to it. Great advice. And when your wife says that to you, it's always encouraging to get used to it, don't you think? So this is called a variable high volume node. You see the volume here. By the way, if you have questions, post them in YouTube or the Bookmap Discord Trader Lab. I'll do my best to get back to you. My time is very limited, so if I don't answer your question, just come over to Trader Lab. There is a link in the bottom of YouTube. The Trader Lab community, there is no cost. It's a serious community of traders looking to build a business of trading. I like to say it's not romper room. So it's not a trade calling room because that's a waste of your time. What this is about is helping you understand how the market works. If you understand how it works, you can't predict what'll happen, but you can anticipate what might happen. And that's the best you have in trading is maybe. So right here, the market opens, RTH open. We see chop, chop, chop. Now, chop, chop is a micro auction. It's right there. And I see my buyers. So right here, I'm looking at this. This bothers me that this is in the wrong place. We're just going to ignore this, okay? So this is too low. This is the new retail price. Let's label this variable high volume node. And what I'm doing is I'm tracking volume and price. And the auction is really kind of simple. What is maddening about trading is the randomness of the behavior of the participants. That's the thing we know we don't know. So right here, I see a chop, chop, chop. Now, what is a chop, chop, chop? It is a consolidation. What happens is the market moves directionally and then it pauses. And when it changes its behavior, it is really a price check. I used to call this a price check in aisle 3, kind of like shopping. And this right here, you have this interaction. You'll notice you see the sellers here. This is delta. So those are the aggressors. I have a selling iceberg here and no clue. And I see no buyers here. Now, there are buyers and sellers everywhere. I'm not seeing aggressors. These bubbles are delta. So and there's a filter on this, so I'm not seeing bubbles all over the place. Of course, there's buyers all over the place. But where are the majority of them in any particular location? Now, if I open this up, it'll break them apart. I can see more minutia, but I like to just see the highlights. So see what I see here? Sellers, they got absorbed. How do I know that? Buyers are above them. Do I need to see every little blip? I personally don't want to see them. I want to see the broad stroke. Once you understand order flow, you'll know here is a seller and you're not seeing anything up here. So if I see a buyer here, then I know right here is a fight. So there's two possibilities. Obviously, there's more than two. There's many, but mostly it's if this seller takes control and I have no buyer here, then I can rotate. That's what it means in auction world. However, what happens if this moves up, it is suggesting this might underline be too low. Let's look at the behavior. Sellers are here. Buyer absorbed this seller. Buyers are here, sellers here. Let's think about this. If this is too high, it is resistance in the microstructure. Just saying. Where do we come so far? Here. Now I'm sitting here and I'm going, where are we going? I'm going to show you this. I forgot all about this. I want to show you something. Where was it? Wait a minute. Let's see if I can find this. One of the things I have is with these white lines, I don't know where I put them on. So let's just see. Was it out here? Let me just see if I can find this, guys. Maybe not. Nope. Okay. Sorry about that. I'm trying to show you something, but when I put something on a chart like this, it goes indefinitely in both directions. And if it only kind of went one way, it would be a little easier to see. So right here, I come down, I test, I get a bounce, watch it, just follow what goes on here. So we're coming down, and I'm clueless, right? I can prove it. Spend a lot of my life in clueless. I want to show you this. Oh, RTH open, no wonder. Okay. Um, right here, right here. So right here, I'm looking at this. Let's just watch. Okay, right here, I have a micro distribution. I have a seller here. So these guys were absorbed, sellers, okay? This guy up here was absorbed. I'm going to mark, and here's the variable high volume node. This now is my resistance. You can see where this is. This is where we started out on the RTH open. So this was too low. You know how this works. What's too low, what's too high, right? We're all clueless. This now is what I call a variable high volume node. I'm also going to mark this. I'm going to put a little line here. And I do this, well, let's just say, I try to do this and discuss this with Trader Lab participants. So this is a variable high volume node, and you could see the behavior here. Now, this sets up a couple possibilities. This can be a short if you're in the Trader Lab, or you're just sitting here like I do, and you're going, I have sellers early, and I know the market is short. If I know the market is short, then the possibility exists. If I get these shorts in here, which is residual selling from yesterday, and the market is oversold, I can get a reaction. And now I'm going to show you a long, or try to show you a long. Here it is. So this is VPOC migration. This says everything above is too high. Let me come back. I'm going to mark this variable high volume node. Just follow the sequence. So what I do is all I'm doing is very simple. I'm just trying to see what the shoppers think, and that's the other traders. Well, right here, this is microstructure. And I see absorption at the buyer. I see buying icebergs. I see sell stops coming out. And of course, my teeth are chattering because I've got this below me. And I'm thinking, well, maybe this is secure because in the yesterday's low was tested in the ETH and we rejected it. So possibly, and this is what I posted early this morning in Trader Lab, I said possibly we're going to have two-sided trade today. Oh, okay. And maybe a neutral day, which means we take out the low, first hour's low, this, and then come up and take out the first hour's high. So that was what I had coming in. Then it's whatever happens, happens. It's just a process. And then if it doesn't happen, then it's sort of like you pull a different plan out. In other words, I adjust because there's no prediction. Remember, we want to know what's going to happen because we don't like uncertainty, which we can certainly understand, right? So right here, I see microstructure. I mark it because I break high. I come back and check it right here. This shifts down. This is a problem because right here, if I don't get above this, then we're going to do this. So, and that's Trader Lab. Now, let me just mark it. I got to actually look at my my trading platform and see what time I took this long. Hold on. Take a second, guys. Hold on a second. I want to show because I don't want to miss where I got it. It was, wow, okay. So when we cross above here, this sets up a potential return here. And this is my support. Now, I don't know, well, I don't know anything, but when it crosses over that is suggesting, now it can do anything. Let's not forget, when it crosses over, that is suggesting maybe, underline, this is too low. And then this was the last place it was too high. I got to turn something off here. It's disturbing. Hold on a second. Okay. Sorry, guys. So this sets up a long for me. Now, how do you get into this thing, right? That's part of the joy. Let's look. Ah, I believe it was right here, 83 and change. As soon as we crossed over and I had this, I considered it kind of aggressive, but I figured I have a statistic in here. I think it was there or it was a pullback. I can't remember now. I really can't. But I did post this in TraderLab. So I was going for this. Okay. So that was a nice trade. So what I do is I scale here. I got long at, I have other trades. I just want to show you the structured trades. 83.25. So right here. Lucky to draw. No skill involved. Scale is here. Stop is under this white line. This is my support right here. So I did this and I was going for this. Now we get up here and I'm thinking, yeah, things are nice, you know. And I'm thinking, all right, now we got the shorts on the hook. So that was what my trade was. And I was going for this. Okay. Because statistically, there's a high probability when you open higher in range that we're going to get there. Now, to me, I was looking for it because I was looking for the shorts to get squeezed. That's kind of my plan for the day, and that's what I posted at TraderLab. Now, of course, whatever happens, happens. You got to adjust to it. Let's look here. Now, this, you know, I also posted this in TraderLab. Unfortunately, it was so fast. So I didn't, you know, because right here, let me just show you this structure. Right here, I'm seeing the sellers. This is buyers are here, and I'm seeing absorption. So this and the stop sweep, there's all kinds of stuff going on in here. I see my buy, I see a seller here, and I see absorption. The buyers are here. So still looking okay to me. Now we pause. Right here, I'm going to draw a line so you can kind of see this. And it was too fast for me. So I ended up leaving, as they say, a bunch of confetti on the table with this. So right here, I see my buyer and I have a seller. So what this is showing, this is absorption. So there's always two sides, you guys know. So if I see delta selling and I see a buyer absorbing, who's going to win? Now, you can see here, there was a seller and the buyers, and then we kept going. As we're coming up, these purple boxes are the sellers, and the buyers are eating them up. So that means the buyers are still in control here. Here I see a seller, and the idea is that the buyer would keep going. That's the thought. I mean, that's about what you got in this. And then right here, I have nothing. And I'm going, well, you know, I'm watching it. I'm just going, okay. Right here, I get my buyer. I get another seller. Here, I see the sellers. I see the seller. This is where the trade has a problem, right here. So you draw a line across here, and you've identified the high volume. This is what an auction or consolidation looks like. And all a consolidation is a rotation, right? And inside of your consolidation is high volume. Think of this like a shopping experience. Consolidations are really shopping in the sense of it's an auction. And remember, the thing about an auction is it happens in all time frames and fractals. You see? Does that make sense? So this becomes too high, and you don't know until hindsight. When we fall, when you get under here, big trouble. When you get down through this, big trouble. So all this is trouble. I got taken out. Very exciting. And I went, oh, great. So now what? It changes. So everything now is different for me. And I go, oh, bummer. Look where we come. Variable high volume node. So this is support, but the fact that we missed the overnight high kind of puts the whole thing in question. So, and I'm under yesterday's retail price. Okay. So now I'm saying, well, this is now mean reversion. It's a change in context. What's mean reversion? Rotational trading outside in. So if this is the new retail price and this is too low, right there, then I want to change it. I am now looking for what's called rotational trading. So what happened is we got the longs, which was me, squeezed the shorts. Now the longs that are in here become the ones on the hook. That sets up this. Once I have that, then it's, where's the outside edge? It now is here at the time. And that sets up something called mean reversion. And I posted all this in TraderLab. In TraderLab, we have different plans for different conditions. And the thing about the market is the condition changes. So it's not a one size fits all. So I did not have a short up there. It was just get out of the long. You know, I don't turn the barge around that quick. So for me, if I'm long, I manage my trade. And I'll keep taking the same directional trades towards targets unless there's a substantial change. Here, a substantial change. So this is support. You notice where it comes, and there it is right there. Why? This price is too low, and there's my VPOC migration. This is now retail. Too low, retail. What's too high? And this is the mid at the time. So I come up, there's the mid, here's my outside edge. So what I am looking for now is outside in rotational trading. So this kind of a thing. But the idea we might underline, I got to mark a couple things for you. You can kind of see some stuff here. Let me just get these. These are fractals or microstructures. I'm going to throw a couple of these on here. And I take time doing this because this is about, the auction is made up of this. Consolidation are pauses and auctions. So I'm going to, and I'm going to mark one other one down here for you. And again, I don't know. I don't want you to think I know anything. What I know is what might happen. I don't know what will happen or where. So I know this and this. Let me draw two other little boxes, and then we'll go on. All I'm doing, what this is so simple. The thing that is difficult is our need to know what will happen, but we don't know what will happen. I wish, and I spent years trying to create certainty before I understood that there is no certainty. When I stopped trying to get certain, my results changed dramatically because my concentration was no longer on predicting something that is not predictable, at least in my opinion. So these are two levels, okay, that we want to be conscious of. And this is a chop is a consolidation. Where's the buyers? Nada. Sellers took control here. Buyers' last stand was here. And there's the break, the test, and a potential continuation short. I'm just saying it's not, but it could be if you knew what was going on. Let's watch. Outside edge, microstructure, right here. Let's go to fractal. That's a short. And the target is here. I posted that in TraderLab, I believe. So I took that. Doesn't matter what I do. It's what you're going to do. Let's watch the behavior. What's too high? Let's come back to the fractal. Watch. Hope you're getting something from this. Trading does not have to be complicated. It is random. So it's kind of like choose your poison. You know what I mean? How do you want to do this? Complexity, to me, and it's just a personal opinion, obscures what's right in front of you because we think complexity reveals something. I believe, and again, I'm just talking personal beliefs, it does not. So I know this is too high. This right here is retail in here. So this is the short. This is the scale. And then you're going for down here or lower. So scale, come outside. If it takes this out, then this trade is over and you would get your burgers. What's this? Chop, chop, chop. What is over here? Too high. This is another short in the TraderLab. Back to here. Just watch. Not saying this is good, better, and different. You know, it just is what it is. What's this right here? Let me show you. Now, before this gets back here, let's just look at what's happening. Right here is the volume. You could see it there. It's actually right there. That's called a high volume node. So this should be maybe over here. All right. I'm not going to take the time to move it. Once you understand how this works, you won't be drawing lines, but I want you guys to be able to see it. So if and look where we come down here. That's a scale. So there's a scale here. There's a target here. Let's watch. Where do we come back? I meant to draw another line here. Remember why I'm drawing the lines. Because I want you to be able to see what looks like noise might not be. It might be something else. So there's the volume in this thing. Let me take it back so you can see it. See the volume? It's right there. And that's a function of all this volume here. If I open this up, this is too high. This is my resistance. Now the volume is coming in over here. I break low. This is a micro trigger structure. So what I'm doing is I'm using this, and then when I break and I get the trigger, the volume becomes resistance, and it's there and it's here. So let's see what happens structurally. Look where it pulls back. This is a TraderLab trigger, and these are all available in those 60 PDFs. This is support. See? And this is called mean reversion. And what mean reversion is rotational outside-in trading. So we went from directional trading to rotational trading and a potential trend change to down, subject to how you trade and your thing. You know, it's like your groove. It's shorts only, shorts only, shorts only. Or if you're a counter trend trader, up to you, short to here, and you're going for this. Rotate outside, short to here, or long back. You know, it's whatever you want to do. For me, in this context, it's shorts. Now, there's more. Really? If that's support, this is resistance, then what is this? Support. If I break below it, what is this? Resistance. Are you guys with me? There's more. What is this? Resistance. And these are not all in the Trader Lab. I'm just sharing you what you can develop. Now, any questions before I go on? Hope you're getting something out of this. Please give a thumb up in YouTube if you're finding this interesting. This is trading in fractals. This is auction market theory. This is using a volume profile as a chassis and microstructure. So what's happening in here is the same thing that's happening in the whole thing. It's fractals. So you can determine what you want to do. I think I took a long somewhere in here. Yeah, I did. Okay. I'm going to show you another trade here that I took. Then, you look back at these things and you go, gee, was I out of my mind? What was I doing? Where is it? Wow. Hold on. Hold on a second, guys. I'm looking back because I do take trades that are not the, part of this. It is, but it's not. I mean, they're not part of that structured trade. This is the first hour's low. It's called the IB, initial balance low, first hour. And at first, since we had held yesterday's low and tested it in the ETH, I know this is a very important level. So for me, I was looking at this and thinking, if I come outside and I don't take this out, then I can squeeze the shorts. That's my plan. And I posted this in Trader Lab. So right here, I see absorption. I remember. There's something else I forgot to tell you. My target coming down was here. I posted this in Trader Lab. So this was my target for the shorts. I forgot all about that. Got out right ahead of this liquidity, this. So my brain was kind of aligned with, this is my target. And this is posted in Trader Lab. You guys come to Trader Lab, you can see all this stuff. So I got out of my short, and that was from up at whatever it was, 95 or someplace, wherever I was just showing you. So now I'm out. I have my liquidity. I have my buying iceberg. Okay. I see the absorption. So this is all material to me. And stops. Thanks for playing. Broker sends you a gift basket. So here is my resistance. And I'm looking for a long. Now at 9:30, which is right here, so basically right there, something called the IB stat is locked in, and we have two structured trades in the Trader Lab. Now, getting long here is an aggressive trade, but since I know I don't know, all I do is I try to operate statistically. So if I know, since we tested with the ETH low and yesterday's low, and this was our outside target for yesterday, I left it on here. I'm going, well, we might not take it, we might not take out yesterday's low, overnight, I should say the overnight low. And if we don't, we're going to squeeze. So this is called the IB failure. It's a long, it's a counter trend, mean reversion trade. It is, yes, it's aggressive, and yes, you do need to wear a helmet. Let me show you the trade. And these are not recommendations because all trades, are whatever, random. So I just don't, I try to not prejudge. I try to just follow a plan. Here's my buyers. I see my buyers. I get a rotation back. I take this out. I now take out the first hour's low. So I now have my IB extension. If I come back inside and I hold this, I have a long potential. And I don't, let me see if I can find what time I got long. 9, 50. really? 946, wherever that is. Notice this is resistance, actually. And now let me, and this is an outside edge. So I did not get long here. I marked it because of what happened here, and I had absorption here, and my buyers took over. So I'm using order flow and this. And I look at this as support. However, this is resistance out here. And this thing. This is resistance. Here. I'm not going to keep marking these. So I come up and I take it out. Now I have range extension. Gee whiz. What time was it? Oh, 9:46. Okay. And I posted this in Trader Lab. And I don't call trades because I'm as clueless as the next person. We checked yesterday's low, and I see absorption again. So this is where I got long, 946 here. Let me show it to you. Now I have this. I have this. And I don't take that. And I'm going, haha, gotcha now. Of course, I'm not so sure I got who's got who, right? I'm going to mark this. I posted this in Trader Lab. Just don't read, it was right here. So I got long, like right at 946, and I'll give you the price. And this is trading in fractals, guys. I don't encourage you guys to do this. What I'm going to encourage is that you learn to understand why. Why does the market do this stuff? You know, what does it mean? How? So the structured trade is to come through here. So at 946, I'll give you the fill price on it. 55.73. Oh, 46. Yeah. Where is it? 45. 46 and 23 seconds, wherever that is. So it's got to be right here. Yeah, okay. So I kind of waited on it a little bit, and it was 73. So I got long at 73. Not bad, not great. I mean, right, but that's not bad. Microstructures right there. So I get long, and I know my resistance is right there. I'm going to put a little line. And if you have questions, please post them. I'm going to come up for oxygen. Now, we have a couple more trades here. And then after that, not so much, at least for me, because I haven't seen anything. I stopped trading my last trade. I'll show you my last trade. So this is resistance. So I get long here, and I'm going for out here. This is a rotational trade. This is mean reversion. And this is a fade. And the play was, if I can get over this, I can squeeze. So I know I got to get risk neutral. Let's just see what happens. Support, scale. Okay? Now, watch. I'm coming outside. This is what I got to clear. This here. Okay? And I have resistance there and there. And let's look at where these come from. This is from here. And this one's from out there someplace. It's the high volume and the mean reversion. So I posted in the trade lab. I said, guys, if we can get out here, then we can squeeze. That's what I know. That's why I took the long. All right. And the trade does not succeed. In other words, yeah, okay. And I manage my trade once it comes down. And this is actually what did it for me. This is the retail price. So this trade, the goal of this trade is to get mid, VWAP, and here. So the long, it's a structured trade, is to there. That was where I was going. And when this shifted down, that was the end of the trade. I just blew out of it, and that was the end of it. I said, oh, that's nice. Now it sets up a different trade. It sets up a short. Let's look at it. So we now come back under and we rotate up. So right here, I'm going, well, did we just plunder the stops under the ETH low and yesterday's low, and now we're going to squeeze? I mean, that's what goes through my head because I don't know. Watch. Right here, we have the VPOC. This is the highest developing volume for the day, and we have the IB. This sets up a potential short right in here. And what else do I have here? I have this, I have this, I have this. So I've got levels. So watch. Right here, there's the IB continuation trade. Where the heck is it? I'm trying to remember where this is. You know, I can't remember. Hold on, guys. Let me see. I know I took this thing. 10. Hold on. 10, 14. Oh, okay. Yeah. Right here. I took a short here. This is the IB continuation trade. This is the microstructure. I got short at 225 and then scaled and then holding. And target down below was somewhere in the 60 something or other. Can't remember now. It's all posted in the lab. So this trade, I ended up scratching this trade here. Got a scale, got a burger. That was the end of it. So that's the last trade I took because I stream it. So that's the end of it for me. I haven't seen any of this. Let's see. Them bums, as we say. Came up here, break below. This is another short in the Trader Lab right here. So what I did was, wherever it was, I think it was here, took a short, got a scale, got taken out. That was my last trade. If I was still trading, I'd be looking here. I get the break. I would come back here. This would be a short, and then I'd be on it. Expensive. I'd be on it. So let's look at this. And now I'm going to come up for questions. Microstructure, guys, right here. Too high, seller, test, seller. This is too high. Break away, pause, seller, too high, right here. Break, too high, off you go. Right here we had buyers. They were absorbed. Too high, too high, too high. Micro structure. Sellers here. I see a buyer interacting. Change in behavior potential. I see icebergs absorbing here. Icebergs in here. Doesn't tell me to do anything. It just puts the antenna up. This is what I am using. That micro high volume. You see how it acts as resistance right here? So as long as I'm under this, which was the last place we had buyers and the sellers kept control, that's it. You notice how we come above, that trade would be over. That's the way it is, you know. Oh, and that is a target. Who knew? There we are. We're in real time. Guys, questions? And thanks for your patience. How we doing in YouTube? You guys getting something out of this? Give a thumb up if you are. Helps the stream. And remember, these the trades I'm sharing, and this is a level that's important in the intermediate time frame. These trades are available to everyone. You can download 60 PDFs of these concepts. The specific trades you need to vet and reverse engineer. What I do is I want to catch this stuff. This is what pays. I'm not interested in these little, I use this as what it represents. If this becomes too low and I break away from it, think of it like the shopping experience. Oh, you can't buy it in here. It's sold off, sold out. Then where was it too high? Up here. This is retail. So I don't like the trade counter trend. I'm more of a go with the flow kind of trader. It just isn't my thing. Getting long here is a structured trade, and it was pretty good until this. Then it's turned the ship around and go that way. Now we come back in. This is the IB. So this still right here is a very important level. I do not have a long here. I have a go in the park and hang out. That's it. So I don't have any trades here for me because I've come back to what's called balance. And what can happen in here is I can now rotate around this area. So this is the outside edge where this consolidation is, right here, right? So this is too low. And right now, this is too high. And so this is like the sandbox. So if you're a scalper or a short-term trader, you would need to be entering out here. And there's no range for scaling because mean reversion is this to this. That's the mean. And now support is going to be out here. So if there was enough range here, this is a short mean reversion to there, to there. This area, this out here. So we'll see what it does. And these are not trade recommendations. This is about understanding the mechanics of the market. So the way this works is this is too high. Right now, this is too low. This is where we have a consolidation that we auctioned and we left it. So this is support. This is where the sellers were absorbed. The sellers were absorbing these buyers and they got blown out. What that does is it suggests this is support, potentially. And again, there's no precision in this. It's horseshoes and hand grenades. And it doesn't mean the market won't take it out. That's part of trading. We don't know. I certainly, at least if you know, let me know because I don't know. So here's what I do know. This is an auction in a developing daily time frame. I know out here and out here at the moment, this is too high. I know this is the retail price because it's the highest volume so far for the day. I know out here is too low, and it doesn't mean it can't fall out the bottom and go to zero. I know in the shorter time frame, this is too low. So I have this as support. If I get involved, my target is this, and then back here. And what's at the bid? Stops. So if I get long, and I'm not recommending it, and this is difficult because it's counter trend. I mean, the developing time frame is south of the border. So, but if we're done, which nobody knows, this is my outside area in here, not precisely. This would be the target, and then up here somewhere to squeeze these guys out. So we'll hang out and see what happens. Questions? I'm going to put another little line over here. What I'm trying to do is look at the auction. Remember, what does the market do? It auctions. In other words, oh, that's too high. Yeah, but it's on sale. Nah, I'm not going to pay that. And here's the beauty of Bookmap. Liquidity, and they sold. They were selling, absorbing, and they got run over. That meant demand. Now, is it going to be there when we come back? If we come back, I have no clue. I do know it's support. Is that logical? This is so the order flow is helping me, and so are the levels. So we're going to see what happens. So the buyers were here also. So this is not a trade recommendation. We just want to see what happens out here. Anything can happen, and it could just keep going. Now, the way I tend to work with this, is if I have a level, I'm going to start looking at the level and look for a change in behavior. And these are not trade recommendations. This is advanced. I mean, you really got to have your stuff together to act on a timely basis. And in the Trader Lab, I talk about practice, screenshots, replays on high speed, train your mind. I don't use indicators. So what I'm doing is I'm reading the participant behavior because it's as close as I can get to real time. So here is a seller. There's an iceberg. I want to see what happens in this area. Now, if nothing happens in this area, I have nothing to do. So this is where my order flow comes in. Because what I want to see, if I'm going to get involved in an area, and they're not walls, they are areas. That's all it is. This can do anything. So I'm not someone who goes, oh, it's going to come here and I'm going to do this. That's predicting. I can't do that. What I can do is now look here and look here because of what happened. So I want to see if my buyers show up again. This is the area. So I'm watching this. And if they don't, then we just keep going down. I don't have anything to do here. I just sit here and the teeth chatter. So right here, I'm just looking at behavior. Let's just watch together and see what it does. I see a selling iceberg. I see another selling iceberg, so not so much. But we want to watch the behavior. It could just rip from here. Doesn't mean anything. And there's the seller. That's absorption. That's the iceberg absorbing the buyers. Can the buyers push through where these guys were active? Are they going to sell more if the buyers come up here? Are they going to add? Or are they done and then we get a move up? Here, see this high volume? That's also resistance. I'm going to put a little line there. Now, I'm not suggesting anybody take a trade at all. I'm only narrating behavior so you can see it. So this was the last area. It was too high. This is the last area. It was too low. If I can get above this, then I can come back to this. Does that make sense? Can you see why? Zoltan, hi. You don't know what it'll do. That's part of the challenge of uncertainty. So we can't know what it'll do. We know where it might do it. Now, this is definitely counter trend. I mean, this thing is going south, right? What we never know, never, is what's going to happen here. And I can tell you, if I'm observing this, I would not be taking this trade. I would just be done so far, it just doesn't matter to me. But I always am narrating it because when I see phenomena in order flow, this is the beauty of Bookmap. What does it mean? That's the question. What does it mean? Not what will it do? So I don't know what will happen. If I see behavior and I put a trade on, I can have my stop under here. So, and if I can get this kind of stuff going, 10-point trades and stuff, I'm willing to pay to play because of the way I can do this. But this is not a long I would take. I'm really just trying to show you the mechanics of it. Remember, the sellers are here. The buyers are here. If we can't get these sellers out, then say la guerre. Down you go. And we had the seller, see the selling icebergs? They are here. So I know this is support right there. And you could see it. Here, I'm going to open this up a little further. There, that little high volume node, micro, is your support. Micro. This is like the electron microscope. So I know if I get under that, then the trade's going to go south. So that's what I know. Let's watch it. Just see what it does. Now, this is what the auction is. Now, And what I'm sharing with you is something called trading in fractals. When I look at this stuff, first of all, I want to be in alignment, which is always, and this is counter trend to the nth degree. So it's not a trade I take, but when you're learning to narrate the behavior, this is what I suggest in Trader Lab that traders do. In other words, what's my indicator? It is this. And then it's, what does it mean? I always think of this kind of like language. What does it say? This is the language of participant behavior, not prediction. So if I know what this says, then I know that there was absorption here, the seller, and the buyers took them on. If I don't break below these guys who were absorbed and these guys who also sold, then I can rotate up. That's the first part of this. If I can't get above these guys and this, then I'm not going anywhere. So let's just watch it. The thing becomes, it's not what will happen because we don't know. It's, can you identify behavior that you can reverse engineer and develop confidence in? Not along here. It's not along here. It's the behavior. Because we might only get a little rotation or nothing. As you can see, nothing. So let's watch out here. Because these guys were absorbed over here. If we come out and they get absorbed again, then we'll rotate back. Let's just see. Like I said, there's nothing here for me. So if I'm sitting here, I'm not getting long. What I'm doing is I'm reading the behavior. The fact we're breaking below sets up the opposite, doesn't it? But this is scalping, back here. So if this is too high and this is too low, if I break up and I can't get here, resistance, and this is support, I'm not getting above my sellers, right? I have my sellers here and I got my buyers here. When I break here and I pull back here, that's a short if this is part of your thing, or not, or you're just sitting here. That's how I use these things. Now, I'm not a scalper. In other words, I don't want to, this is like, it might only come over here and then come back here. I mean, this is not my trade. But this is what's important. This is not working right. This little data problem over here. Um, but this here, when you come outside, if you can't get over this and come back into this distribution, then it's the opposite. Then you're going to come down to here and maybe back down to here or just to here. I don't know where it is. Let's go take a look. Oh, still going. So too high, sellers took control. Shot on goal right here. This is resistance. No bueno. If this is support, you know the thing, support and resistance. If we break below, you could be taking a short here, and then you're going to have to get out before the lower scale at least. You have to get risk neutral. Now, this is very micro. It's not something I think anybody should do unless you're really adept at speed and unconscious competence. That's basically it. Let's see if I got anything else down here. This is the target, one of the targets. And then if we get below here, it can just roll right along. Let me see if I have another target under here. Well, so I don't always get everything on here. Well, it's pretty far away. I won't even go into that one. Questions? Costello, I always use limit orders. It's just me. Um, I like the retracements. So I find if I, it's part of a FOMO thing. If I see this kind of deal, if I hit the market, I'm probably going to get filled here and my stop's got to be up here. So when I see this break, I will put my limit order. And if I don't get filled, so example, right here, chop, 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 chop is a structure for a trade. Now it's either going to go long or short, right? Trend is down. That's why I can't take longs. But I also know if I came up here and I see behavior, I could short this, you see? Well, it didn't do that. So, that's why I was saying if I got long, this would be where I'd have to scale. See, so it didn't do it. Okay. I break down here. This is the trigger. It pulls back here. When this happens, I got to throw a limit order in here, and I'm either going to get filled in this or it's unable. So let's just watch this level. We'll see what it does, okay? The outside edge is now here. The high volume node is here. So if we come outside right here, we can come up into here. So then this is now resistance. Doesn't mean, and I'm not suggesting anybody trade this or even like this. The purpose of the stream is to help you see how the market works. You then overlay your process on this in a fractal or time frame you want to operate in. So this is too low at the moment. Buyers were here, absorbed the sellers. Sellers are here, they were absorbed. Sellers here at the moment absorbed. Sellers are here, sellers are here, sellers are here. If these guys want to get short, if we come back up here, they may sell some more. If we can't get back there, then we're just continuing on the yellow brick road. There's nothing to do. I mean, here's the other part about trading. It's not about being busy all the time. I mean, if I do my thing and I don't have a trade, I'm just sitting here. I'll see things, but it's just my thing is I don't want to trade for nothing. I find for me, my risk, my stops are typically 3 points. Once in a while, sometimes it's a little bit more, but typically they're under 3 points. Two and a bit. That's pretty much my stops with multiple contracts. So if I'm going to put that kind of risk on, I'm not doing it, to quote scalp. It doesn't pay. I'm looking for something with more meat on the bone. So then by the way, if you look at this, now it hasn't come back. We've got the same structure developing here. These are distributions or consolidations. What they're telling us in the volume, I'm just going to say, is this is too high. If we break down and this is too high and we do this kind of thing and we leave this, then this is too high. You could be operating in these time frames, but I personally don't like to sell the low of the day, into the low. If I'm going to be into doing something, I want to be on a counter rotation to scale ahead of the low of the day. Just a personal preference, you see. I got to look at a higher time frame chart. This thing is, oh, okay. Well, the higher time frame target, and this is not a recommendation, is 33.50. And let me look a little further. And 47 or 50, maybe. But these 33.50, so 47 and change, right? These are targets, not recommendations. And they're on the map. So these are targets. Now, the thing about a target is, and this is a target too, is clueless. All they are levels that were established by participant behavior last time we were here. The market has a tendency to come back and check them. Now, we don't know if it will. That's the beauty of trading. Or when. So will it? I don't know. So let's just watch. High volume, high volume. You can see this. This is the last place it was too high. So we want to try to watch behavior and see if we can see anything. Now, if it blows through here, it just squeezes. Remember, there's stops above here. So the market has a tendency to squeeze out the weak hands all the time. So this is where we had the exhaustion right here and stops. So if I come up here, then I'm going to be looking here or right here. So if we open this up, there's your stops right over here. Now let's watch. This is an outside edge and the high volume. Boomer, if you're paying attention, I'm getting a little bit of that delays also. So we're going to watch 1,000 icebergs going off, guys. You got to be conscious of this stuff. But here's what's important about this. He's still in there. He wants to buy more. We had sellers here. They got absorbed. This guy. There's the volume. You could see there's 2,000 and change right here went off. Okay. The sellers were absorbed. That's material. That's order flow. Now we want to watch. Remember where the stops were? They were here. So now you got to pay attention to this. Here. Let's keep an eye on it. Right here. Because it's behavior. Again, these are not trades I would take. They're things I observe and I try to draw an idea from. This is important here. So the behavior here relative to this is important. This was a squeeze. We had a big buyer here, right? And he canceled by the looks of it. So he's not buying his 1,200 anymore. So now, right here, we got to watch. Let's see what it does. Right at that microstructure where all that volume went through. So we're watching this. Is this a short right here? Are you guys with me? Now, I'm not calling trades. I really want to stress, this is not what Trader Lab is about. Trader Lab is about helping you understand how the market works, why it does what it does, and how you might get in alignment with it. These are triggering or rotational structures and fractals. What trading, in my opinion, is about is not this. It's where it happens in a higher time frame when you have alignment and then you get the bigger rotations. That's what pays you. Now, this might be just fine. But the way I look at things like this is, if I'm going to get short, it would be what? Here to where? My support's all the way down here. So I can't take it. I'm just telling you. But I can read it, and then I have to decide based, when I say I can't take it, let's just say, subject to my trade plan, if it's something that gives me an edge, I can. If you don't have an edge, this is not, here's this trade. That's not how this works. It's the whole picture. It's very important what happened with these icebergs here. You see this? Here. This is microstructure. It is resistance. That's why I was pointing it out there. I want to put a little line on here for you. Where the volume is, right? This is the auction. What happened here? Break high, pull back, break low. This sets up a short in a scalp because of the behavior and the pullback to the volume. So that's but it's a trigger. It's not a trade. I'm just sharing structure. And what do I know down here? I know that the sellers got thrown under the bus here and there. So this, if I was in a, let's just say this is 20 points and not this, I would, I mean, it's 10 points, but I don't think anybody, here's what the order flow is telling me right here. You see it? Sellers, sellers, sellers. They got absorbed. This volume here, I'm going to put a line on here, is too low. And I'm going to take one other piece in here to show you so you kind of see what is going on here. This is the outside edge. So this is like this kind of a thing. All you're trading is this. And it's called mean reversion trading. And you would be looking for out here, and you'd be managing your trade. So I'm not saying you should be short from here. I mean, where are you going with this? You see? So I don't trade this, but if you can understand it, you can use it when you have alignment in the time frame that you trade. These are, I call these microstructures. They are really triggers. So when you can learn to read this, it helps you with getting in the market, you see, because nobody knows. I mean, I have no clue what's happening here. I see my buyers. Why aren't we just going? Well, because and I don't know until, and I know this is where that Iceberg was, right? This guy. He canceled, by the way. Remember that guy? So he pulled, he interacted, he canceled. Buying going through the moon, Alice, they were absorbed. Now I get my break, my sellers take over, and I pull back to the volume, which was right there, which sets up a short here, stop is here, or even above here if you want to use a shoehorn, and you're going for this. And then that's it. And then you're out, or you're scaling ahead of these guys and you're holding, and you're trailing your stop. Does that make sense? All of this is micro, guys. This is not how anybody ought to trade, but it is how you can identify structure and then, subject to your plan, have a way to interact. That's what Trader Lab is about. Surab, you're asking me how I know the buyer canceled. It's right here, the stop and Iceberg detector. He bought 38, and he was showing 1,200 hanging out in the wind, and then he canceled it. So right there, he canceled the order, and because I can see the orders from the CME, I know he canceled. So if this guy was buying, and then he cancels, what does that do? Opens the door. If I pull back here and I don't get above this, that sets up the short. This could be a short, and this is where it's going. Now, again, I mean, it's not that you can't trade this. Here's what you can do. You got to be really good at execution. There's no time. And in the Trader Lab, what I always talk about is drills. Because here's the deal, as we say. If you see a trigger, this is a trigger. So there's the trigger. Now it's, I got a selling trigger. How do I get into it? A pullback to the microstructure, which is right there or there. And then your stop goes here. And once we break away, your stop can go here, or this micro. See this micro here? High volume, break low, test. Your stop can be here. This is your target, and it's ahead for the scale. See the microstructure here and the seller, the retracement back to it, there, too high. I'm getting down with the electron microscope, and it's not a recommendation. This is what I do. And you can pick the time frame you do it in. Remember, this is support. So right here, the trade could be whatever you want to do with it. So if you took a short, it's 58, whatever, 54, 55, whatever. 4 points. Is it worth your trouble and risk? When I put a trade on, that's almost 4 points, and my risk might be 2.5. I'm risking, let's just say, 5 points on a 2 lot. and I'm going to go for risk neutral here, and then I have one that's just hanging out to scratch if it comes all the way back, and I would. Or I'm just going from here to here if I'm a scalper, and that's the end of it. What's your plan? And I'm talking generically to everybody here. This is what Trader Lab is about, and that's what we do. How are we doing in Trader Lab, guys? And how are we doing in the Bookmap Discord YouTube in the Trader Lab? Let me know. Can you see why? Here's why. This is what you need to understand. This is how the market works. What it is going to do, no idea. So if I know I don't know, I'm not hung up on predicting anything. I am hung up on what the participants are doing, which is why this. You can see it, can't you? So now let's watch. What do we know? This was too high. This was too high. Let's watch it. We have a sweep. We have absorption by the sellers. And if we can stay under here, then we can rotate down. If we come out above here, it's a squeeziteria. That's how complicated this is and random. So if you're micromanaging, you get taken out. Is that the end of the world? Not a problem for me. If it comes up here and I see my seller at a location, you could put the short back out again and come back here. This is scalping. I don't scalp. Been there, done that. Don't do it. Takes a lot of focus, cognitive skill, and it's really just a different plan. That's all it is. It's the same thing. It's the same thing I'm doing when I go for a 20-point rotation. This is the same trading. It's just the range is compressed. So you can do this if it's, but I'm going to tell you, you don't just come to Trader Lab and think you're going to be able to do this. It's training. You got to train your brain and to think of this like language. Can you see the logic in this? Too high, too high. Come back up the resistance. This is where the swing is. So I can take these guys out like those and these. Easy pickings for the trailers. This was the target, right? I come back here. It's another short back to here. If you want to trade this thing, I do not. I will not, because it's not my skill. I get delirious after a while. I get tired. And then if I can't be at a high level of concentration, what I prefer to do is not trade as often, just trade for the bigger swing. I don't know if that makes sense to you guys, but I'm not in the business for action. There were back in the day, and I've been doing this since 1980. Once I got my groove on, I was trading over 100 times a day. Now, it's less. And I traded the NQ during the dot-com bust. That was pretty amazing. And I'm not suggesting anybody go and trade NQ because you have to adjust to the volatility and risk and the skidding and the lack of depth. For developing traders, the ES is probably the best place to be because of depth. So when you're getting filled, they're not going to, like with me in the NQ, it'd be like, yeah, we'll call you next week. We'll let you know where you got filled once we find it on the floor somewhere. Runners would have to go pick up the orders and all this. So this is a long time ago. Anyway, neither here nor there. Questions? You have a problem with FOMO? Well, RP, we all have a problem with FOMO. It's normal. It's part of trading, FOMO. It's part of the dopamine and the triggering process, the fight and flight thing. It's just part of it. We all have it. We all have fear of loss. And fear of loss means fear of profit is a fear of loss too. There's fear of getting stopped out. There's fear of missing out on profits. There's moving your stop to break even. There's bailing out. There's all that behavior is all rooted in psychology and wiring, primal wiring. And if you come to Trader Lab, you'll get I think, a better understanding of those elements, because it's something we all have to, it's just part of it, and it's the biggest challenge. I believe if you come to Trader Lab, you can learn to trade. Now, of course, when I mean anybody can learn. They do the work, and there's a lot of work involved. Notice where we came back, just saying. Here. Saying. There's a lot of work to do, and this is based on a foreign language. So most of us, as you know, start with indicators, and just see an indicator for what it is. It's a translator of participant behavior, or a derivative of some kind. Whatever. It doesn't matter what it is. They're all the same. They all end up in the same place, let's say. So if we can accept what is the input to our indicator and think of it like Google Translate, might it be better, maybe, and more timely, not to wait for a translation that is ambiguous and maybe conflicted, and get down to where the rubber meets the road, where we can look right here and see what happened, so we know this is where resistance is, and we know this is support. Notice the behavior. Can't make it up. And what's right here? Volume. So I know this is too high. If I kept drawing the lines, you'd be seeing them. But you could see that chop, chop, chop is an auction. Right in here is volume. If I break away from it, it is the auction. It's saying, I'm not paying that. I'm out of here. This is like you going to the store. Now, we come back. The shoppers come back to the store. Is it really too high? Yeah, I'm not going to pay that. But what's too low? This. So for me to go lower, I got to come under here. For me to go higher, I got to come above here and then squeeze out these shorts. That's what I know. That's all I know. I don't know anything else. But I can read this. And if there was enough range, which is the other element to all this, and I don't know, this is enough range for anybody, I could trade it. Or I'm just moving the fractal higher and moving to a higher time frame, as you think of it, or higher fractal, using the volume and the outside edges out here. So the better trade for me is not to be messing with this, which I can, but to be trying to get into a higher time frame out here, and then ride it all the way around. You see, it's range. So it's a matter of, if you understand the shorter time frames, you can understand the higher time frames. And then you select, what do you need from a risk reward? So if I'm risking 2-3 points of trade, or contract, I should say, then I'm not going to interact for change. I can, but I find, for me, I'm not here to take a lot of stops. I can do that on my own very successfully. I'm here to try to get the rotation to pay. I hope that makes sense. Please give a thumb up in YouTube if you got something from today. Appreciate you guys visiting the Trader Lab. Here's what these PDFs look like very quickly. You can come to Trader Lab. There's a link in the bottom of YouTube. These are actual trades, as you can see. And I just kind of threw these out into the chat. Traders are asking me, what are you doing? I'm going, here's what I'm doing. And a lot of this is, all this is based on what I developed over many, many, many years of abuse and randomness, and trying to figure it out. Why did I keep waking up with the same, doing Trader Groundhog Day, which is trying to fix something that doesn't have an edge. And if you're experiencing that, you can click the link in the bottom of YouTube. There's no cost to become part of the Trader Lab community. You can then have access to the 60 PDFs of these structured trades. You can reverse engineer them, see what might fit. Be part of the Trader Lab community. It's a serious community. It's all about the business of trading, how to build the business, how to understand how the market works, why it does what it does, and you to get in alignment based on your psychology, and then to vet trades and only interact when you have a statistical edge. It takes time, and yet you'll be in a community with other traders doing the exact same thing. Some traders put a trade on, go to the gym. Other traders are trading these very short-term rotations. It's really kind of what your groove is. In addition, there's a library of webinars that are exclusive to Bookmap Discord Trader Lab participants. And you can access all this plus statistics and a lot more. Thumb up please on YouTube on the way out. Have a terrific weekend. Thanks so much for visiting the Trader Lab. And if you're not getting the results you want, you might want to maybe consider what you're doing, and maybe it has nothing to do with your effort or your intention. It might have to do with your process and the need to be right, when really casinos don't need to be right. Casinos who do really well extracting dollars from the gamblers, even though the gamblers win cost of production and overhead, over time they extract the dollars from the gamblers. That is the business of trading. And it is not about predicting, because the casinos can't predict either. It is about only interacting with the gamblers when you have a statistical edge and the consistency to apply that edge in a disciplined fashion. Thanks again, guys. Look forward to seeing you Monday. Thanks for visiting Trader Lab. And remember, this stream is available exclusively to Bookmap Discord Trader Lab participants to review, reverse engineer, etc. Take care, guys, and look forward to seeing you Monday morning.